Welcome, grade 12s. Yes, today's section deals with fixed assets. Now remember, when it comes to fixed assets, the section would entail other aspects of the curriculum as well. In other words, if you're looking at asset disposal, yes, that would form part of the section on fixed assets. Now, let's take an example. When we start off with what we call a fixed assets register, remember, it is important for you to understand what information goes into your fixed assets register. For example, you will have a description of the asset, right? You will have the original cost price of the asset, the date when the asset was purchased, and very important, the depreciation rate as well as the method of depreciation will be specified in your fixed assets register. Now, if we look at the fixed assets register, what you can clearly see is that as the years have progressed from the time we purchased the asset until the current date, what has happened? Yes, the asset cost us a total of 180,000 Rand, which was the original cost price. And if I ask you a question now, based on the fixed assets register, and the question is, how much depreciation have we written off on this asset since the time we have purchased it until the present moment? And clearly you can see that we have an accumulated depreciation of 136,782 Rand. In other words, the current value of this asset is 43,218. Take into account that you purchased the asset for 180,000 Rand. You've depreciated this asset yearly, annually, at 30% per annum on the diminishing balance method. Now, the question arises, what do we mean by the diminishing balance method? Look at the calculation once again. Notice in year one, we wrote off depreciation to the value of 54,000 Rand based on 30% of 180,000 as the cost price. But in year two, you did not use your cost price of 180,000 Rand in order to determine your depreciation. What did you do? You took your cost price, remember, you will take your cost price minus your accumulated depreciation, and that will then give you your carrying value. And it is on your carrying value that you will now calculate your depreciation for the next financial year. Reason for doing this? Very simple, because we are using the diminishing balance method of calculating the depreciation of this particular asset. Okay, so all of this information would appear in your fixed asset register. Important. Okay, let's move on. We now go to the dreaded note number 3. Now, once again, if you understand what you are doing, there's no reason to fear this note. Let me explain. You start off this note by taking into consideration your balances at the beginning of your financial year. And that is very, very, very important. These are your balances at the beginning of the year. So, you need to understand that when a balance is given to you in other information or in a trial balance format, then which balance is being provided? Is it my opening balance or is it my closing balance? obviously you can see that your closing balances appear at the end of the year. And this is where majority of learners make the error. You are unable to identify whether it is my opening balance or whether it is my closing balance. And therefore, by you inserting the wrong balance at the wrong place, you make a mess of note number 3. So, once you have ascertained exactly where your opening balances are, you know where to start with them. Now, land and buildings, obviously you know, does not have accumulated depreciation, right? When it comes to your vehicles, you've got your cost at the beginning of the year and you subtract your accumulated depreciation. And this brings me now to a point where I have to ask you a question. What type of an account is accumulated depreciation? And certainly the answer has to be, it is a negative asset. Negative asset? What do you mean by that? By a negative asset, it means that that portion of the asset that has been utilized since the time we purchased the asset. In other words, the cost price of this asset is 390,000, right? To date, we have used up 108,000 Rand of this asset, and it therefore has a carrying value at the beginning of the year of 282,000. Watch, cost minus accumulated depreciation. Now, I'm going to give you a minute to look at the rest of the note and identify pertinent amounts and where do they come from. Go for it. Welcome back, grade 12s. What have you seen? What are the questions? What are the figures that you need for this particular note? Watch. Number 1, you've got disposals, but important, very important. It's disposals at carrying value. Do you see that? Not the cost price, not the selling price, but the disposal at carrying value. And notice that it features in a bracket because you are subtracting. Then you come to depreciation. And with regards to depreciation, what is it that we want? You want 3 components of depreciation. It would be your sold, your old, unsold, and your new. So when it comes to depreciation, but before we continue, what type of an account is depreciation? Remember, depreciation is what we refer to as an imputed expense, an expense that does not affect the flow of funds. No money is changing hands. So keep this information stored in your brain somewhere. Why? When it comes to the cash flow statement, we're going to apply this information. So you can see then in accounting, there's information that you need to know across the curriculum. And one of them is depreciation. Right, so the 3 components are sold, unsold, and new. Right. Once you have that, you now slot in your balances at the end of the year, and notice that when you're doing this note number 3, this note must be in balance. In other words, when you're working from the top to the bottom, and when you're working bottom up, this is what I mean. This figure here, you will see, should be the same figure. And this then tells you that your note number 3 is indeed correct. Okay. Let's take a look at this particular information here now. Whenever you are doing a question that has an asset disposal linked to it, my appeal to you, I'm imploring you, I'm begging you, always use this method in order to do your calculations. Watch. Start off with your depreciation. What would that entail? That would be your depreciation for your current year. Right. You've got the cost price of the asset. That was the initial cost price that the asset was purchased at. Your accumulated depreciation would be your balance at the beginning of the year plus the current year's depreciation. Notice where it comes from. In other words, add your depreciation for your current year to your accumulated depreciation, and that will give you your total accumulated depreciation. Got it? Brilliant. Then you come to your carrying value. Where does my carrying value come from? Cost price minus the accumulated depreciation will give me the carrying value. Next, your selling price. How was the asset disposed? Okay? More about that later. What we need to know is determine the selling price of that particular asset. And then finally, you will notice that we have made a profit on sale of asset of 12,750. Where did we get that figure from? You took your selling price of 51,750, and notice that your selling price is greater than your carrying value, and this results in a profit on sale of asset of 12,750. So, what are the important points that we take from what we have discussed so far? Here goes. 1. If my selling price is greater than my carrying value, I have made a profit on sale of asset. If my selling price is less than my carrying value, I have made a loss on sale of asset. And where my selling price is equal to my carrying value, you will find that there is no profit or loss on sale of asset. Okay, grade 12s. Now, look at your asset disposal account. There's your cost price. There's your accumulated depreciation. And you will notice that the asset was disposed of with a selling price of 51,750, and you have it as your detail debtors control. What does it tell you? It tells you that the asset was sold on credit, right? And because the asset was sold on credit, your detail in your asset disposal account would obviously be debtors control. Now, there are other ways of disposing of a fixed asset. So, if you want to know more about the other methods of disposing of a fixed asset, I want you to think about the different methods. And when we come back after the break, we'll be discussing those different methods of disposing of a fixed asset. This one that you have seen is where the asset was disposed of by selling it on credit. There are other ways. You think about it. When we come back after the break, we'll discuss those methods. Keep on thinking. See you in a jiffy. Welcome back, grade 12s. Yes, you had some thinking to do during the break. Let's see. What are your different options when it comes to the disposal of a fixed asset? If we sold the asset for cash, then my contra entry would be a debit to asset disposal and a credit. Let's do that again, one more time. A debit to your bank account. Why? Because your asset is increasing in value. Which asset? Bank. And you are crediting your asset disposal. Okay, so now, if you compare that to what we had here, can you see the credit in my asset disposal was debtors control, telling you that you sold the asset on credit. Therefore, if we go back now and we say, fine, if we sold the asset for cash, we are debiting bank, right? And we are crediting asset disposal. Notice my contra is bank. If the asset was traded in, remember, we can trade in an asset, then my contra would be a debit to creditors control, right? And a credit to, yes, once again, asset disposal. So what are you noticing? It's your debit entry that keeps on changing. And your credit entry will always be in your asset disposal account. Notice that stays the same, immaterial of how you disposed of the asset. But the debit entry would depend on how you disposed of that particular asset. Okay, let's just take one more. If the asset has been insured, the insurance company have acknowledged the claim but have not paid us as yet. Something different? Certainly it is. What's my contra entry? It will be a debit to, so remember, it's part of an insurance claim that we have not received the payment as yet, so it's a debit to an account called insurance claim, and a credit to asset disposal once again. Now, keep this in mind. This insurance claim is the equivalent of a debtor, but it's a specific debtor. Who is it? It's the insurance company. They owe us this money, and very soon we'd be receiving this insurance claim. Okay, guys, now that we have that sorted out, let's go on and look at our question. We are given information and we are expected to complete the fixed or the tangible asset note. Now, I want you to study this note for the next 2 minutes, and what I want you to look at is to see what information am I expected to complete, because this is an incomplete asset disposal with a note number 3, and look at the information and start in your minds now or on a piece of paper. Tell yourself, right, these are the things that I'm going to be looking for. Make the notes so when we do the explanation, it will become crystal clear to you as to where we get the information from. You got 2 minutes to work out the template for yourself. Go for it. Well, grade 12s, I'm sure, I'm almost certain you've noticed that you've got the carrying value of your asset at the beginning of the year, right? You've got the cost price. Notice the accumulated depreciation is not given. So obviously, what am I going to do? I know that cost minus my accumulated depreciation will give me my carrying value. So obviously, what am I going to say? I'm going to say 740,000. Okay, let's pick up our calculator here. And we say 740,000, okay, minus the 500,000, obviously will give me a figure of 240,000. Now, what is the 240,000? Obviously, the 240,000 is my accumulated depreciation. Why do I say that? Because cost price of 740 minus my accumulated depreciation of 240,000 will give me my carrying value of 500,000. Understand, you need to know how to do these calculations. Right, let's look at equipment now. With equipment, the cost price is not given, but I'm given the accumulated depreciation and the carrying value. So obviously, this means therefore that I have to take my calculator once again and say, fine, in this case here, I've got a carrying value of 128,000 plus an accumulated of 132,000, and I know that my cost price minus my accumulated will give me my carrying value. Obviously, I've got to add these two components, and we're going to do it without a calculator. It should give us 160,000. Check it out. 128, 130, 160,000. Clear? So, now, you've already put in two figures that you are expected to know when you are doing a note number 3, right? Clearly you can see the idea is to see, do you know how to work with the cost price, the accumulated depreciation, and your carrying value? Okay, now, there's the information. It says there, details of fixed assets. An old vehicle with a cost price of 150,000 Rand was traded in on the 1st of September 2013 for a new one costing 300,000 Rand. The trade-in value was 60,000 and the accumulated depreciation on the vehicle traded in was 98,000 Rand when at the beginning of the financial year. Right. I'm going to give you 2 minutes to draw up your table. Remember the table that we alluded to in the first part of our lesson. We said, draw up a table when it comes to an asset disposal. Now is the time to see whether you can use this information to draw up a table. Go for it. right, grade 12s, let's see if you have drawn up this table. Okay, and here goes. Depreciation, cost price, accumulated depreciation, carrying value, selling price, profit or loss. Okay, let's start. We know that the cost price of the asset that we are disposing of is 150,000, correct? So therefore, immediately I go into my table and I say, my cost price is 150,000. Notice where my information is coming from, right? We also know that we had an accumulated depreciation of 98,000 Rand. Therefore, accumulated depreciation, 98,000 Rand. Okay? We also know that this asset was disposed of on the 1st of September 2013. Aha. Now, clearly you can see that let's identify the method of depreciation. We are depreciating our vehicles at 15% per annum on the diminishing balance method. Immediately it rings a bell. I've got to work with my carrying value reason because it is the diminishing balance method. Got that? Okay. Number two, when did we dispose of the asset? The date is crucial. In accounting, dates are very, very, very important. And I'm sure dates are important in your lives as well. And some dates are more important than others. Okay? And if we look at the dates that you eat, they're also important because they are very nourishing. But in accounting, the dates you have to determine is when exactly was the asset disposed. Okay. What we're going to do now is we're going to take a break, and when you come back, we're going to carry on with the calculation of that table that we were busy with. So take a quick breather, make sure that you are ready for us when we come back. See you just now. Welcome back, grade 12s. Right, let's do a quick recap. We're busy with an asset disposal. We've identified the cost price. We've identified the accumulated depreciation. What do we do next? Right, let's look at the method of depreciation. We said the method of depreciation was 15% per annum on the diminishing balance method. Therefore, what are we going to do? We're going to take out our calculator and we're going to say 150,000 minus 98,000 to give me a carrying value of 52,000. Immediately we say, right, 52,000 times 15 over 100 times 6 over 12. Yes, remember we spoke about art. What do we mean by art? The amount, the rate, and the time. So 52,000 times our 15% times 6 divided by 12 will give me a figure of 3,900. Right, what is the 3,900? The 3,900 is my depreciation for my current year on the asset that I have sold. Let's just make that clearer. Got that? Okie dokes. Now, immediately that depreciation is added to my accumulated depreciation. There goes 3,900. Clear? Add the two figures together. And what do we have? 3,900 plus 98,000 to give me a figure of 101,900. Okay? That is equal to 101,900. Okay? Once again, take your 101,900 minus 150,000 to give you a figure of 48,100. Carrying value 48,100. Okay, what have I done? I've established my depreciation for my current year. I've added it to my accumulated depreciation to give me the new carrying value at the time of disposal. I now go back and find out what was my selling price. This vehicle was traded in for 60,000. Immediately coming back here, I say, right, selling price 60,000. Okay? And clearly you can see that on this particular disposal, we have made a profit. Why a profit? Because my selling price is greater than my carrying value, and therefore, take your selling price now of 60,000 minus your carrying value of 48,100 to give you a profit of 11,900. Right, now let's use this information in our note that we are expected to complete. Watch. I start off my depreciation by putting in the 3,900. What was that? That was the depreciation on my sold vehicle. Remember I said three components: sold, unsold, and new? Right, so I've got my sold. I still have to work out the other two components. But I also need a figure that says disposal at carrying value. Do I have that information? Let me check. Voila. There's the carrying value of the vehicle that I disposed, 48,100. Immediately I say fine, 48,100 is the carrying value of the vehicle that I disposed of. Can you see the importance of doing this particular table? I can't overemphasize its importance, grade 12s. You can see you're getting this information. Yes, if you were doing an income statement, relate now, you need the profit on sale of asset. There goes. So from here, you are able to ascertain certain information which you will need to complete in terms of the requirements. Okay, let's go back. In terms of what I know, did I purchase a new vehicle? Yes, we purchased a new vehicle that cost 300,000. Aha, so coming back to my note, additions at cost for my vehicles would be 300,000. There it is. And with regards to my equipment, what do I know? New equipment was bought for 54,000 Rand. I think we were that figure you did not have to slot in. It was given to you in your answer book. So that figure was a given, but let's assume that figure was not there. You would then calculate the 50, or you would insert rather the 54,000 as your equipment that has been purchased. Notice additions at cost. What did I purchase during my financial year? Right. Okay, coming back to that depreciation now. Let's continue with our calculation. Okay, what do we want? we are told that we have to calculate the depreciation of the other two components. Here, we calculated the depreciation of the sold vehicle. You recall? Now we go to unsold. And when it comes to unsold, let's start off with my given information. My vehicles had a cost price of 740,000. Okay, so I open my bracket and I say 740,000 minus the cost price of the vehicle that was disposed of, which was 150,000. Clear? And very, very, very important. What was the method of depreciation that I'm using for vehicles? It was my carrying value. Therefore, you'll need your second bracket. And your second bracket would be the accumulated depreciation. Watch, opening balance, 240,000. Therefore, 240,000 minus, now this is the one that many candidates make a mistake with. Watch. What was my accumulated depreciation for this vehicle that I disposed of at the beginning of the year? Clearly you can see from your table once again, 98,000 Rand. Do you see that? Do not use the 101,900. Why not? Because the 101,900 includes the current year's depreciation. And this opening balance does not include the current year's depreciation. It is your balance at the beginning of the financial year. Okay, so here goes. We say 740,000 minus 150,000 to give me a value of 590,000 minus, it was 240,000 minus 98,000 to give me a value of 142,000. So there's my second bracket. Okay, now we say 590,000 minus 142,000. Why? Cost price minus accumulated depreciation gives me a figure of 448,000, which is my carrying value. Okay. A, we've got rate 15 over 100 times my time. For what component, for what period am I working out my depreciation? Remember, this is unsold. In other words, you had these vehicles for the entire financial year to give me 12 over 12. So 448,000 times 15%, which is equal to 67,200. Okay, now 67,200 is my second component. Let's go back and say, right, we've got the depreciation on our sold and we've got the depreciation on the unsold, which was 67,200. Clear? Okay, we're not done yet. We're not done yet. Why? We now need the depreciation on the new vehicle. The new vehicle that we purchased was, your note will tell you, you purchased one for 300,000. So immediately you say, fine, 300,000 over 1. We've got our A. Our rate is 15 over 100, and our time. This vehicle was purchased when we traded in the old vehicle. That means 6 over 12. Grade 12's art. Very, very important. Your amount, your rate, and your time component. Okay, let's do the calculation now for this one here. And we've got 300,000 times 15%, which is equal to that times 6 and divide by 12 to give me a figure of 22,500. What is this? The depreciation on my new vehicle. Right, let's go back. Let's put in that component now, plus 22,500. And now, what do? We take the 22,500 plus 67,200 plus 3,900. Can you see what I'm doing? I'm adding all the components of my depreciation. I'm adding the sold, 3,900. I'm adding the unsold, 67,200. And I'm adding the new, 22,500 to give me a figure of 93,600. Clearly you can see all the components that were necessary to determine or to arrive at my value of 93,600. Okay, now let's look at my equipment. Remember, with equipment, we were using depreciation at 10% per annum on cost. So immediately we go to our equipment. The cost price of my equipment is 160,000. So immediately I say, let's work out on the old first. Here goes 160,000 times 10%. Easy calculation, should give us 16,000 Rand. Okay, now, let's just keep the 16,000 Rand aside, obviously because of space constraints. The question arises, what about the 54,000, the new equipment that was purchased? Let's look at the information. New equipment was bought for 54,000, right? We've got it, no problems with that. On the 28th of February 2014. Remember, we spoke about dates? That's right, guys. When was this new equipment purchased? It was purchased on the 28th of February 2014, meaning the last day of the financial year. Obviously, there is no depreciation on that equipment because we bought it on the last day of the financial year. It is practically brand new. We did not use the asset during this financial year, and therefore there's no depreciation on that aspect or on that new equipment. Therefore, we can now safely put in our depreciation on the equipment of 16,000 Rand because it was only on the old equipment. Did I dispose of equipment during the year? Definitely not. Grade 12s, we went into detail with this particular aspect of fixed assets. And the reason we did that was to give you a clear indication, a clear understanding of how you relate note number 3 with asset disposal. And yes, this very, very important table that you have to at all times bring into consideration when you are dealing with an asset disposal. Let's recap. What's important for you to remember? When you're disposing of an asset, determine the time when it was disposed, determine how it was disposed, draw up your table, work systematically, because in that way, you will then be able to put in all the components that you need to complete note number 3. Grade 12s, we have now reached the end of the lesson. And remember what we always say, guys, practice, practice, and more practice. From myself, Ashraf Patel, and the crew, James and AB, have a sterling weekend. Keep your feet on the ground and reach for the stars, because yes, you are an accounting star. Until the next time, be good. Bye-bye.